Hi, I'm Chris Price, and I get asked many times if I'm a fiduciary. And it is honestly because choosing a financial advisor can be a daunting task, as there are many titles and roles in the financial world. So it could be difficult to determine which advisor is best for you, or maybe more importantly, which advisor is required to put your needs above their own, or legally required. Therefore, one of the best ways to make an informed decision is to honestly ask your advisor if they are a licensed fiduciary, and will the relationship be held to a fiduciary standard or a suitability standard. Now, a fiduciary is legally obligated to put your interests ahead of their own and must disclose all what they call conflict of interest, which could be commissions and things of that nature. So making sure that you are working with a fiduciary could provide you a peace of mind that your advisor is focused on helping you achieve your financial goals. So let's kind of learn a little bit about what being a fiduciary means, and maybe do you need that level of care. So again, you're going to hear many different titles. If you're researching financial advisors, you may have noticed that there are hundreds of different types of advisors from which to choose from. Some of the most common types of advisors are like brokers, investment advisor representatives, holistic independent financial advisors, those kind of things. And it's important to know the standards each of these advisors are held to when you're making a decision of who to hire. So let's break those down a little bit, right? We have broker or financial service representative. Now they might manage your portfolio. They sell financial products like mutual funds, insurance policies. They do it all for a commission. And they're not going to be held to a financial standard. They're going to be held to a suitability standard, but because they're getting that commission, they're not going to be held to it. Therefore, those advisors might be licensed as a fiduciary, but they're not going to be working with you in that fiduciary standpoint, unless they're disclosing to you the commissions that they're making, things of that nature. So investment advisor representatives charge a flat fee or a percentage of your portfolio. Now they're always held to that fiduciary standard and to act in the best interest of you. Then you have like this independent hybrid advisor, financial advisor, and they act on both fields or both sides. So they'll act as a fee-based or fee-only advisor, but they'll also sell other products like insurances and stuff like that. So what exactly is a fiduciary? Now, in general terms, a fiduciary is a person or entity who has power to act for another in situations that require complete trust. When it comes to the financial industry, registered investment advisors are licensed fiduciaries for their clients. You also may see someone who says certified financial planning professional. Now they're also held to this duty, this fiduciary standards, when it comes to providing financial advice to their clients. Now by law, a fiduciary advisor must be completely transparent and always act in their client's best interest. They are also obligated to avoid or at least disclose any potential conflict of interest. Additionally, the ongoing service and investment monitoring that they're providing also falls under that fiduciary duty. In other words, their job doesn't end after the initial meeting or purchase. They must regularly review your account and help to ensure that your investments or your financial products are of best interest to you or will perform the best for you. As stated earlier, there are financial professionals whose services do not fall under that fiduciary standard. Now, this doesn't mean that they're out to steal your money and can never be trusted. Far from it. There are some bad apples, but that's not what that means. This just means during those transactions, they are not legally bound to be a fiduciary. Those financial professionals who register with FINRA, which FINRA is the regulating agency that kind of governs people like myself, people who are securities licensed. I advise anybody or everybody, whenever they're working with a financial advisor or plan to do a broker check on them, to go to the FINRA website, check them out, see if they have any disclosures. Disclosures are maybe complaints or problems that may have happened or arise. See how many companies they've been with. See how they're licensed. How their license is going to determine what they're actually able to offer you, what they're not able to offer you, that kind of stuff. They're also being held to a standard known as Reg BI. Now this is a step in the right direction, but doesn't take things as far as a fiduciary standard that's required by maybe the registered investment advisors. Now that registered directly with the Securities and Exchange Commission. So what does all this mean, right? With a fiduciary, there are several benefits to work with an advisor who serves in that fiduciary capacity. For one, they are always open and have to be transparent. Aside from the obligation of maximizing the value for your money, working with a fiduciary may give you confidence that your advisor is working in your best interest rather than their own. They'll give you their true professional opinion. Now, a lot of times that true professional opinion means it's not the answer you want to see or you want to hear. Right? This is extremely valuable when you're facing big life decisions. For instance, when it comes to maybe buying a second home, transitioning to consulting work, or retiring earlier than expected. Their job is to review your entire financial picture. An advisor could show you the impact a decision has on making your future goals or pursuing these goals. So most fiduciaries are going to want to take a holistic approach to your financial picture. The reason they're going to want to take a holistic approach to your financial picture is honestly because there's going to be different things that you may want them to do that will affect some other part of that picture. Right? So if someone was to ask about managing a certain portfolio or managing, let's say, a particular amount of assets of theirs, well, they would definitely need to know what other assets you have. Not because maybe it's being managed poorly or whatever the other case might be, but to be a fiduciary, I need to make sure that the investments that we have in the portfolio we're managing don't contradict with the investments you may have outside. Or maybe someone might be interested in retirement income planning. And then it will not just be about providing the income that that person needs for retirement, but what is their expenses and how will their expenses change over the next 5 years, 10 years, 20 years, or however much time those expenses might be. Or when we're talking about retirement income planning, needing to know what our tax situation is, because do we have to make sure our income is tax-free or in other kind of tax advantage accounts, or is it okay to maybe maximize return and not really worry too much about taxes because maybe you're at a lower income tax bracket that year or something of that nature. So majority of fiduciaries are going to give this holistic approach to picking your investment philosophy or whatever the case might be. So I hope everyone learned a little something from this short little video about the different terms that we have within the financial world. If anybody has any questions, go ahead and leave a comment or go ahead and shoot us out an email and we'll make sure we get to you. Hope everyone has a great day and I look forward to the next one.